We all know the theory. Draw a line connecting higher lows in an uptrend or lower highs in a downtrend. Wait for a breakout and boom, profit, right? Well, not always. The problem is drawing trend lines is subjective. What looks like a valid trend line to one trader might look completely different to another. Are you connecting the wicks? The bodies? Which points are the most important? It's a mess. And let's be honest, how many times you have thought you had a perfect breakout and only see the price reverse and stop you out? I've been there. We've all been there. It's frustrating to spend time analyzing charts, drawing lines, and still get it wrong. But what if I told you there's a better way? What if you could eliminate the guesswork and have the trend lines drawn automatically for you? Well, I found something incredibly interesting, and it's a game changer. It's an indicator that automatically plots trend lines on your chart. Yes, you heard me right. Automatically. You don't have to lift a finger. But the best part, it doesn't just draw the lines. It also alerts you when a valid breakout occurs. No more second guessing. No more staring at charts for hours. You get a clear signal when the price breaks out through the trend line, giving you a high probability entry. The indicator is called pivot trend lines with breaks. To add it to the chart, you can simply add it from the indicator section of the trading view. Just type in pivot trend lines with breaks and hit enter. Then find it in the results and click on it to add it to the chart. Let me show you how it works. So, how clean and accurate these trend lines are. And the breakouts alerts are spot on. This indicator takes the subjectivity out of trend line trading, giving you a clear edge in the market. Okay, so about this awesome trendline indicator, it's really great, but honestly, it's not perfect. There are occasionally some little hiccups, a few false signals here and there. So here's my advice. Before you jump into a trade based on a trendline breakout, it's a good idea to get a sense of the overall trend first. Just a quick glance to see if we're generally moving up or down. It just adds an extra layer of confirmation. Now there's one other thing I should mention about this indicator. By default, it repaints. Now for those of you who don't know, repainting basically means the indicator can change its past signals as new data comes in. It can be a little tricky, but good news. You can actually turn that off in the settings. Just a little tweak in the settings window. And boom, no more repainting. Problem solved. Alright, so now we've got that covered. Let's bring another tool into the mix. The Trader XO Macro Scanner Indicator. This thing is super useful. It basically looks at two main things: EMAs, which are exponential moving averages, and a stochastic RSI. Now EMAs are usually used to get a feel for whether the market is leaning bullish, meaning going up, or bearish, meaning going down. Pretty standard stuff. But before we start using it, let's make a few quick adjustments to the settings. I like to change the fast EMA length to 100. And a slow EMA length to 250. Then I set the consolidation to 45. We can also make the lines thicker if you want them to be more visible. And since we're not using the Trader XO indicator as our signal generator, we can actually turn off its built-in signals. Just a few little tweaks to make it work perfectly for our strategy. Alright, so let's talk about how we actually use this stuff to find some good trades. It's pretty straightforward. Basically, we are using those EMA lines, the fast one and the slow one, to figure out the overall trend. It's like a quick and easy way to see what's going on the market. So here's the basic idea. If both fast and slow EMA lines are green and the price candles are hanging out above them, that's a pretty good sign we're in an uptrend. The market's generally moving upward. On the flip side, if those EMA lines are red and the price is below them, well, that tells us we're likely in a downtrend. Things are generally moving downwards. Now here's the key. We want to trade with the trend, not against it. It's like going with the flow of the river. Much easier than paddling upstream, right? So this means we're not going to open a buy position when the market is in downtrend. That just doesn't make sense. And of course, we're not going to try a sell when the market is clearly going up. We want to be on the winning side. So how does this tie into our trend line breakout? Well, once we figure out the overall trend using the EMAs, we're looking for the breakout that confirms that trend. For example, if we're in a downtrend, we see a bearish breakout, meaning the price breaks below a trend line. That's our signal. That's when we might consider opening a sell position. It's like everything lining up perfectly. Now where we do put our stop loss and target? Good question. For bearish breakout like this, you could set your stop loss just a little above the recent swing high or maybe even above the MA lines. Just a little bit of protection in case the trend goes against us. And for your target, a common strategy is to use a risk-to-reward ratio of 1 to 2. This means you're aiming to make twice as much profit as you're risking. And guess what? The same idea applies to bullish breakout in an uptrend. If you see the price breaks above the trend line while the EMAs are showing an uptrend, that's our cue to potentially open a buy position. Let's set our stop loss and target in a similar way, just on the opposite side of the trade. It's all about trading with the trend and managing your risk. It's a pretty simple but effective strategy.